Good afternoon, everybody. Welcome back to Lunch and Learn. I'm David Cowan, president of the museum. I see we're joined by John Herzog, the founder of the museum. In the past week, Bitcoin has certainly been again in the news, used as ransom for the global hack. But unlike previous times, it's very interesting, the price did dip, but we're rapidly back at our near all-time highs. And today we're going to hear from Brian Iha. He's an expert on the subject and has been following it closely for 5 years. He's a journalist by trade, and his work has been published in The New Yorker, The Atlantic, Fortune, American Banker, as well as a half dozen other publications. He left his job as an editor at Entrepreneur in order to write this book, and he would be happy to autograph a copy afterwards. You can follow Brian on Twitter at Brian Iha, but now let's follow Brian as he explains how money got free.
So I'd like to start by telling you a little bit about how I came to be here talking about Bitcoin. So I kind of came across Bitcoin in 2011, early 2012, but the first time I had a chance to write about it professionally was in the summer of 2012. I was a staff writer for a time at CNN Money, and some news had leaked out of a Bitcoin startup that was based in the Flatiron District, which some of you might know is kind of called Silicon Alley. It's like our answer to Silicon Valley. And some news had leaked out because the CEO, was a little bit indiscreet. And I thought, this is interesting. A couple of little blogs had written about it, but nobody had actually gone and interviewed these guys to confirm or really find out what was going on or what their business was like. And so I pitched this to my editor. And I'll never forget, she said, okay, go and do the story, but don't make it out to be more than it is. Bitcoin it's nothing. It's just a kind of digital curiosity. It's just a plaything for crypto anarchists and hackers and so on. Well, I had a kind of inkling that, maybe that wasn't quite right, but I didn't know enough about Bitcoin at the time to really dispute with her. And so I just thought, all right, and I went and did the story. And as I talked with these guys at their startup in the Flatiron District, I just was overwhelmed. I was overwhelmed with how hungry and passionate they were. They were very much of the Mark Zuckerberg school of kind of moving fast and breaking stuff. And it really blew me away how they were kind of giving up everything in order to try to build the early infrastructure of a new economy. And at the same time that I became impressed with them on a sort of personal and entrepreneurial level, I really became kind of impressed with the technology they were describing and the world that it could bring forth. And the CEO of that startup actually became one of the main characters in my book. Back then, the price of a single Bitcoin was less than $10, and the market cap, the total value of all the Bitcoins in existence, was $96 million. Well, today, as you were told, the price is above $1,800, close to $1,900, and the market cap is now above $30 billion. So you'll forgive. Same number of coins? There are some more coins, but the increase in the number of coins, which is a kind of steady inflation rate, is not at all the full reason for the increase in the market cap. But anyway, so you'll forgive me for saying that I think I made the right choice to take it seriously. Okay, but what is Bitcoin? How does it work? Why is it worth anything at all? Well, in the simplest terms, Bitcoin is a form of commodity money. When it was released in January 2009, its original promise was to be kind of the first truly universal currency, a form of decentralized digital cash that could be sent around the globe in minutes and would work just as well in New York as it does in New Delhi. The transactions were anonymous, or they were supposed to be, and it all took place on a network separate from any government or bank. So Bitcoin can be used as a unit of exchange, something with which you would buy a plane ticket or a pair of shoes, or it can be used as a store of value, like gold. So that's kind of the double meaning in commodity money, of course. And it's also a revolutionary payment system through which you can send money in the form of Bitcoins anywhere in the world, across borders, peer-to-peer. So the interesting thing when I first came across Bitcoin that struck me is that early internet pioneers had always envisioned that a payments protocol would be woven into the fabric of the web as a sort of basic element. And then I knew that Peter Thiel, when he founded PayPal, his original ambition which he actually talks a bit about in his book 0 to 1, was to create a new internet money that would replace the US dollar for online transactions. And he might have actually accomplished his ambition, except that 9/11 happened and a whole raft of new financial regulations came down to try to prevent money laundering and terrorist financing and so on. And the company was forced to pivot to become a much more traditional sort of payments company. So the brilliant thing that Satoshi Nakamoto, the creator of Bitcoin, did is that rather than found a kind of new company like PayPal, he instead created a decentralized system that no one would own, but anyone could participate in. A constantly updated copy of the ledger recording all Bitcoin transactions would be stored on the computer of anyone running the Bitcoin software anywhere in the world. And they would all have a share in kind of maintaining the integrity of the network. So it started out as the first money of the internet. But as people started looking more deeply into the technology underlying this digital currency, they started to call it the Internet of Money. The technology underlying Bitcoin is called the blockchain. It's basically a tamper-proof ledger for recording transactions, which of course, forgive me, sounds like the least sexy thing in the world. But the revolutionary thing about it is that it allows you to verify and record transactions without the need for a central authority, which normally would be a payments company like PayPal or Venmo, or it would be a bank, or it would be a government. So businesses and their services can be decentralized, which simultaneously cuts out the middlemen that add a lot of cost to the system, and it eliminates any single points of failure in the system in one fell swoop. Now, this is obviously disruptive to a lot of businesses. It was really interesting when I was writing my book to dig into the international financial system and try to find out just where Bitcoin could be most useful.